Good afternoon. Welcome to Options Tender. It's Tuesday, September 23rd, 2025. Welcome, traders. So this is the chart I posted on the Discord during the weekend. I said, this is it. Let's keep it simple. I made a video on it for members as well. And I just want to show you exactly what we were looking at. And very similar to this wedge here, this bearish rising wedge. But this one's more steep, okay? Price is consolidating. You got contraction into expansion. This one very well easily could have been an ascending triangle, and you broke out to the upside. But on the same note, we knew we had our divergences that we talked about for almost 4 months here. And I know that there's a lot of people on this channel that are, he's just so wrong. It's so wrong. Whatever. I don't care. These wedges were forming. We saw them forming. We didn't know if it would end here. You don't know. But we're getting into this really tight price action in the near term, and this isn't going to last much longer. Yes, could we get fill out a little bit more? Sure. Yeah, absolutely. But when this does break, that'll be our first sell signal, and when we're looking for a reversal. Clearly we're looking for reversal. So if you're duplicating these charts here, this is actually an analog chart. Okay, so let's go ahead and go through our regular analysis so we can see some of these indicators as this happens, and we do this each and every day so we can see the progress of these indicators. And the information I'm gathering from a lot of people, from a lot of traders or viewers on this Discord, is that you're just, the indicators don't work. Okay, well, they take time to play out. And let me just adjust this back to log scaling. They take time to play out, and that's why we want to do this and show what the capability of these, the MACD, when it gets stuck and just drifts to the downside while price is moving to the upside. Those are only clues to tell us that we are going to get a reversal. It's a game of probabilities, and after the breakdown here, you had the nice move back up here, and we're forming the same kind of wedge. And a big deal will be if we break back down below these 1929 trend lines in 2008. All right. So we see the wedge here isn't drawn the same way. That's because the actual structure, in my opinion, this was the beginning of it as wave one. So typically, if you want to draw the exact wedge or ending diagonal right here, you would start from this peak here. And you'll see that on SPY when I go back to there. So let's look at our trend indicator. This is to try to keep us in the trend until or unless you're at resistance, okay? Then your probability of going higher is reduced. But if you would have bought here, you're going to see nice price action. You would have had some good profit if you just held on. But I would have never held on into this trend line here, this wedge, okay? So this, if you kept your wedge the same, they would call this a throw over. All right, so the trend is still technically up, but we're looking for a reversal. And then our moving averages, momentum, we're at right now with the top of this wedge, and the 20 is the trend indicator. So momentum's up, trend is up. Clone oscillator is just giving us a hint. This entire period, after each correction, of course, once you make new highs, then we start seeing in the near term divergences once again. And so you see money flowing out. It's weak breadth, and everything depends on the larger tech stocks to hold the market up. Here is our RSI. We had the overbought situation. We're coming out of that now, and we're looking for this trend to end here with the slow stoke. It held on to the trend line, and we're getting the divergence here as well in the near term, and we're looking for that curl over to get us a sell signal. And again, the MACD, you see the histogram turning a little bit darker green, so that means it's converging again. and we'll have to see a sell signal if that starts to turn red, and especially if we get past the 0 line here. All right, let's go over to SPY, and then we'll check the DMARC situation, see if we have a setup here yet. Let's change over to the divergences screen. And we had our 9 count sell signal. We're moving up to a 5. I don't know if we'll get another 9 there or not. Things seem to be reversing. We'll see. We're only testing the lows of yesterday at this point. And then just to give you a traditional look from the SPY point of view, it's drawn a little bit different. We have these channels that we're playing out, and the 2 channels converging here is actually giving us that wedge. All right, so you had your fake break underneath the blue channel, but we created with that new low there another white channel here, and so it works perfectly with these highs and testing here and failing from that point so far. All right, so let's look at the money flow index. As price makes a new high here, we're overbought territory, works like the RSI. You could get a divergence, you don't need to, but if you use this money flow index, the timing obviously is the hardest part, but you have, where's the divergences? You have we don't have a divergence here. Timing is a very difficult part, but it catches so many turns, and you can pause it here if you want to. It even has the hidden divergences, which was bullish in this scenario in the purple there. So look at these turns and check this out. It's a really, really good indicator. Here's your Bollinger Band. Okay, price right up top that Bollinger Band with overbought situation. That's a sell signal. And again, if you guys aren't familiar with setups, everybody has their own setups that they use, and you can use a multitude of these indicators. That is a setup in itself. For the Bollinger Band, you use this with the Bollinger Band with the RSI, and you get those oversold or overbought situation into the Bollinger Bands, and you have your setups there. Other people set up they just use the MACD, RSI, and slow stoke. That's the way, there's many ways to do this. So making these new highs, you're not making new highs in the Elliott oscillator. Let's go over to the VIX. VIX, I told you yesterday, is very, very important. The clue that it was giving you, and it was a simple clue. Excuse me, where you're breaking out from the bottom portion of the wedge. You do have other trend lines above that we'll test again, but the important thing was this indecision candle was holding on to that 50 and the 8 EMA, and the 20s right underneath, but that was very bullish for the VIX. And so with this next push up here, I just think we're really starting to move. You had your higher low, and then not a new high, but another positive structure here where price was tightening, and basically could have drew a triangle, and it's breaking out from that now. And this candle is not correct. We did not get a new low there. This was actually a higher low. Okay, so I'll show you that on the 65 in just a minute, because quick update on MJ. We were really pushing this yesterday. We're looking at early sell signals and such, but we had the breakout from the huge wedge from a few years ago, and we had a breakout from this this bullish falling wedge, and right now we're having a little trouble with that 20 EMA, but we're looking for this to maybe price action tighten up. Do we get a new low? And not likely, but there is support there. But if we're nesting and getting a higher low, then you'll probably see this start to move. And it really goes, a good question in the Discord was if the stock market starts to tank or correct, is that going to affect cannabis? And no is the answer. This is going to trade a little bit more like a commodity, separate from stocks. and this can continue its uptrend higher. So we're looking for the gap close. That's what we're looking for. That's around 38. Source. This is a little bit more volatile product, but really same situation. The bullish falling wedge, having a little trouble with the 8 and the 20. So if you want to wait for a more conservative play, you want to see price action get back above and keep that trend to the upside. So far, the trend is not up. We're in a sideways motion here. All right. But this is still a really good setup. You have the 50 right underneath if it goes that far. And really, we could. Why not? Let's look at IWM. Here's their wedge. Although it hit higher on this ascending trend line here, we're reversing off of that now. So that was in the negative now, but it was all the way positive here at the top of the wedge and couldn't break out. So again, great setup to the downside. And that's moving along with the market now. DIA, same thing. And I know this is all on the back of Powell, Fed Chairman Jerome Powell. But, all the stuff he said really just reiterated exactly the same thing he said last Wednesday. But that was triple witching. And so it's no surprise that, shenanigans were happening last week. And now we're just really getting our continuation into Turnaround Tuesday, which also was, if you didn't see yesterday's video, was Rosh Hashanah. So that seasonality with the second half of September, along with Rosh Hashanah, along with triple witching, there's all sorts of stuff that needed to happen. And, we didn't know if it was going to do it afterwards, before, whatever, but we're getting our reversal signals now. Now we need to see follow through. Let's go ahead and look at SMH then. So in the Discord, Jeff was asking, do you have a better trend line? He had a nice one that brought a top in, but from the lows to low, really didn't touch at this point. And it looks a lot different in the analog, but you had this almost like a triangle breakdown here. And we're just back testing that. That's it. So that's where we're getting our reversal off of. And we'll see if we get continuation. So let's go down to the 65. And let's see if we can learn anything else from these last moves here. So you have this little wedge that's playing out. That's our bearish rising wedge in the near term. That's also the ending diagonal that we have in place. And we have our initial move down. Maybe we get a little bounce here and then break down from the wedge. And I'll go ahead and tighten it up to looks like it wants to stop there for now. And I'll use the body of that instead of the wick. It's still not quite there. Maybe price just has to go a little bit lower first. But either that, we're looking for a lower high, and what could be happening is you have to form market structure to the downside, so you need to see some lower highs. I know that in rare situations, you just see a big straight line for your wave one, but that's not typical. Typically, you need to see your market structure form here, maybe a 1-2, and then you fall underneath the wedge and back test it again. So maybe 1-2, 1-2. Or a lot of times you have your initial wave one come down and then you back test as wave two. So there's lots of ways it could play out. So here we are rejecting off resistance. Trend is changing on the hourly, so that's a good reason to be cautious. You have this sell signal right here on this bar that closed underneath the 20 moving average, the 20 EMA. And so when this does start to turn red, which again, this is on a weekly period, whether you change it to if you change your time frame on the daily, hourly, 4 hour, doesn't matter. Our indicator is set on a weekly level. So not to get too deep into this trend indicator, but it only turns red when the weekly candle closes below the week before. Okay, so this might take a while to turn red here, but you do have that early sell signal of closing underneath this 20. So you could look to buy here as a extremely risky situation. But if you get a close back above this moving average, that technically would be another buy signal. Okay, but I know that the divergences are ready to play out, and that we're getting to these really critical zones here. So I would not buy this. But look at this. You got that sell signal back underneath here, and it ended up being a higher low. And you got the buy signal with that strong hourly candle, and that would have made you some money over this moving averages. And so same here. Now while you're in the trend, okay. Moving averages were underneath that 8 and the 20. That's time to be a little cautious. You had this divergence here in the very near term. We had a longer one. We have a huge long one. But in the near term, we had this high and then a lower high with this high and a higher high. All right. Got oversold here, overbought here. That gave us the sell. Do we continue to move lower and oscillate down here in a weak market? Is this changing? We don't know yet. This could be a buy, like I said, an early buy signal to where this is oversold, or just maybe we get a bounce. Okay, again, that's that 1 2 1 2, or it can move lower. But here, if we start to get this cross here, that's going to be a near-term buy signal. So that might indicate that we get our bounce off of this trend line, and then we continue perhaps tomorrow. DMARC. We had a 9-count sell signal on the hourly time frame, and it gave us that perfect sell signal this time. Let's see if we get a 9-count to the downside, maybe get us a bounce signal. So far we're at a 4. So the setup was beautiful there. That was also a good setup for the money flow index. You made that new high, and you just weren't seeing money flowing back in on that. So another sign of some weakness, and we should see this roll over and be in the oversold territory. Bollinger Band. Again, you had that top Bollinger Band with the overbought situation. That was a sell signal in itself. That was a setup. And like we talked yesterday, this lower high here was not confirming that move that went up there. And we have that on the 2-hour for our members on our setup. We have a different setup for members videos. They give us a much cleaner, much smoother look at this divergence, if you would, and gave us a sell signal as well. So let's look for this to break down, and whether we get a bounce first or not, we'll be looking to short the market again on any bounce. Okay. Any near-term VIX? Might as well, because we talked about the VIX yesterday, where it was so important. Here's your low. Here's your higher low breaking out of that wedge. And now we started to make this, first of all, an equilibrium here. So that's why we drew the triangle. We broke out of it early today. And so that was our first signal that the VIX was going to go higher. But also we had this trend line that we're hanging on to as well. So we're at the options expected move, and it looks like we tagged the gap here. Let's see if we can get into the gap, maybe close it, and then consolidation after that. So we'll see. We have some nice kind of 1 2 1 2, and then 1 2 1 2. We have a nice setup here for the VIX to really start going. So if all of this is market structure, positive market structure, you have, and this isn't, I'm not really Elliott wave counting here, but this gives us the positive structure. All of these have to play out to the upside. So 1 2 1 2 1 2 1 2, and even on a really small scale, 1 2 here. And so we should, in my opinion, from the looks of this, we shouldn't have too many bounces on the downside for the overall market, and unless this is part of something else that needs to come down and maybe correct again. But if we're just continuing to move at this point and then consolidate and then move, all of these structures have to play out, and that can be very bearish for the market. So keep an eye on that. And that's it, you guys. Let me get this out to you. Thanks for joining us here at Options Center. Don't forget to like and subscribe. And once again, we're doing this intraday. If you want to become a YouTube supporter at 99 cents, feel free to join us in the Discord. And we talked about all this stuff plus so much more. And we have really smart people in there. So, don't take my word for everything. Get the outlook from many different points of view. So thank you. We'll see you tomorrow.